Welcome to the Jill on Money Show. It is Thursday, December 14th, and this is kind of the last week for big economic data. So before we conclude the year, probably worth covering the two biggest stories of the year, and that's exactly what I did on CBS Mornings yesterday. I went on the program to talk about inflation and interest rates, which really are the two main stories of the year, of course. And the day before, we had the Consumer Price Index report, which came out and showed actually a little bit of an increase from October to November. Prices 3.1% higher than a year ago. Lowest level in 2.5 years. So whatever, best since May of 2021. But the core rate of inflation is still up by 4% from a year ago. It's about 2 times what the Fed wants. Even though the Fed is probably going to be psyched about the trend, which is in the last 6 months, the Fed's preferred measure of prices, the Personal Consumption Expenditures Price Index, or PCE, that core rate has risen over the last 6 months at a 2.5% annualized rate. And that's pretty close to the Fed's 2% target and down pretty darn sharply from the 6 months prior. That was when the core PCE was running at a 4.5% annualized pace. But of course, there are parts of this inflation report that weren't fantastic. It's that darn shelter index, which is up 6.5% from a year ago. Food costs are up, especially if you're eating out. Going out to dinner or lunch is going to cost you 5.3% more than it did a year ago. So I went on CBS Mornings to discuss this inflation report, and it was yesterday morning. And so you'll hear me talk about what we expect the Federal Reserve to do, which is exactly what they did, leaving interest rates at a level of 5.25% to 5.5%. Because we were kind of pressed for time, they asked me about, hey, what does this mean for consumers? You know what I didn't get to? Savers. Savers have been able to find 5% interest rates for high-yield savings accounts, some money market accounts, CDs. If you are seeking those great savings rates, check out depositaccounts.com. That's a great aggregation site. And now, without further ado, here is my segment yesterday on CBS Mornings with our anchor, Nate Burleson.
In today's Money Watch, we are talking about inflation. A new report shows it held steady in November, and today the Federal Reserve is meeting to make a decision on interest rates. CBS News business analyst Jill Schlesinger is here to break it all down. Good morning, Jill. All right, let's jump right into it. So inflation is trending down, but it still feels like everything costs more. Why?
Okay, so first of all, we peaked 9.1% annual CPI back in the summer of 2022. We're now at 3.1% as of November from a year ago. So we're trending lower. Really good news. That said, you're not crazy if you feel like, oh my gosh, everything feels like it costs more. Because if we go back to before the pandemic, 2019 to today, think about this. You need $120 today to buy what you bought for $100 4 years ago in 2019. That's tough. Shelter prices up.
Yep.
Going out to eat, it's up. A lot of things are more expensive, but we are trending in the right direction.
That puts it in perspective. So how will this news impact the Federal Reserve's decision on interest rates?
Fed's going to just stay pat today. They're going to leave interest rates at 5.25% to 5.5%. They're done for the year.
Okay, so interest rates are still high. Who is this affecting the most?
Okay, if you're a borrower, it stinks. Okay?
Of course.
Credit card rates are above 21%. Auto loans near 8%. And if you even look at mortgage rates, even though they're not
the
directly...
housing market, that was my next question.
Yeah, the mortgage rates went up to 7.8% for a 30-year fixed. They're now at 7%. That's more than double where they were 2 years ago. Housing market, new buyers having a terrible, terrible struggle. Prices are 40% higher than they were in the housing market than they were before the pandemic. You're not crazy. Things cost more, especially housing.
Now, we've been having this intimate financial discussion since the beginning of the year when economists were saying the recession is coming. Are we out of the woods?
Well, no recession this year. I will never say we're out of the woods because things can crop up. But so far, it does look like we have that elusive and happily soft landing.
Okay, I think that's about it. As I said, this is probably the last of the big financial news before the end of the year. We'll get some housing data out, but, The housing market is just crazy right now. Very difficult to buy a house, as I mentioned in the segment. That said, if you are looking to buy a house or if you're looking for a reason to sell your home, do get in touch with us. Go to JillOnMoney.com, click the Contact Us button, and let us know if you would like to come on the air. Check out everything on the website. There's all new stuff. It's really good. Mark has put a nice section in there on our new YouTube channel, Jill on Money, powered by The Compound. You'll see the first episode. There's going to be more about that in the coming days and weeks. I'm so excited for this new show. It's going to be great. You can also subscribe to the Jill on Money live service. That's where you have access to quarterly live webinars and a lot of cool bonus video content. You can subscribe to this show, Jill on Money, on the Odyssey app or wherever you find your favorite podcasts. Lift someone up, change your work, change your wealth, change your life. Thanks for listening, and we'll talk to you tomorrow.